connect with the management. And first up, we have the management coming up from Bansal Wire Industries. We have Mr. Pranav Bansal, who is the MD and CEO, joining us. Hi, Pranav. Morning. Good to have you on ET now. You have. All right. You have come out with your updates and you have recorded a highest ever quarterly sales volume. Firstly, if you can help us understand what were the drivers behind this sort of a growth and going ahead, what's the outlook?
So I think the main driver was our major plant, the Dadri facility coming on stream. We had a lot of more products, a lot of more production in the last quarter that we could sell. And then, of course, markets were also good. I think overall, because of the diversity that we have in our products, I think we were able to sell a little more quantity. But it was majorly because we had more to sell.
Okay, and at the end of last quarter, you had given a guidance of 30 to 40% volume growth and 20% EBITDA growth. If you can take us through whether you would want to increase your guidance basis the kind of performance that you have reported in the third quarter?
So, starting the year, we had a guidance or a target of 30% volume growth and 10% EBITDA growth. Whereas seeing the results of the first two quarters, we increased it to maybe from 30 to 40% kind of a volume growth and from 10 to 20% EBITDA growth. So for now, I would like to stick with it. I'm sure we should be able to achieve these kind of numbers because the first three quarters have done well. And fourth quarter and the third and fourth quarter generally in our industry is always better than the first half. So yeah, I think right now our target is to at least achieve those guidance.
And Pranav, I believe 20% EBITDA growth was something that you were targeting for. Is that intact as well?
Yes, that's the target. Anywhere between 10 to 20% was our number. We would try to be more close to the 20% number as well as the 40% volume growth. Now we have our plants ready. Dadri plant is doing well. We have capacities coming on stream every month. So I think we should be able to get there.
Okay, so that's as far as your EBITDA and volume growth guidance is concerned for FY26. But if you can take us through any major capex plans that you have lined up because of which your capacity is set to increase, what is the quantum of your capex and how much will your capacity increase by consequently?
So other than honestly the volume and EBITDA number, our main target for the year, this year and next year has been on cash flows. So as a company, we've never generated a lot of cash. But now in the last 6 months, we have changed the way we work. We are realigning a lot of our capex as well to this target. So we've taken a target of about 600 crores of cash flow that we have to achieve this year and next year combined. That is the main target. And looking at that, I think we would keep on investing about 100-150 crores every year for a 20-25% capacity addition that we need every year, which will come directly from the cash flows.
Right, but Pranav, the other factor for your industry is actually the steel prices because in the Indian markets, we have seen that whole safeguard duty imposition and some of these companies have already raised the prices is what we understand. You use that commodity as the key raw material. If you can give us some sense, what will happen to your products, your pricing, how much of this is a pass on initially? Will there be any case for you to absorb that cost increase?
Sure. So how our business model works is we are a cost plus company. Whatever decrease there is in our raw material, which is of course steel predominantly, we are able to pass it on to our customer. Most of our products, about 90-95%, it is passed on the very same month. So we do not expect any increase or decrease in our margins because of steel prices movement. Even in the last 2 years, when the steel prices moved downward, our EBITDA remained intact. And even when it goes upward, I think we shouldn't be expecting this.
Mr. Bansal, since you're telling us that 90% of the raw material volatility is passed on to your customers, can we then infer that EBITDA margins or EBITDA per ton is likely to remain stable going forward as well?
Yes, that's the target. Our EBITDA per ton should remain stable, whether it is a decrease or an increase in our raw material. Yes, of course, we are also looking at, we are trying to better our product mix. We are getting into higher margin products. So over the long term, we are only looking at our EBITDA per ton to increase.
Pranav, I believe that I was just going through your presentation where you have focused on the new specialty products as well, how your company is working on that. And I believe those are the high margin products for you as well. So going ahead, what are the plans there? And as a part of your overall mix, how do you see the specialty products contributing in your overall product portfolio?
So specialty wire is a very recent vertical that we established. And in most of the products, we are the only Indian company to get into these kind of products. And although these products take a long time for approvals, customer approvals can come within 1 to 3 years, can take as long as 3 years. But we expect specialty to start contributing from the first half or the second half of next year. And that's when we will see a change in our EBITDA profile as well on the blended basis. And that's the future for us. As a company, we have to grow at 20-25%, or at least that's what we aspire to do. So that 20-25%, I think specialty would be a big game changer for us in that.
Okay, and as a percentage of your revenue mix, Mr. Bansal, how much do you generate from the international exports market?
International markets, we are exporting to about 50 plus countries today. Europe and US are the main contributors there. But overall, our export percentage is generally around 10% of our total revenue. As a company, we are still focused on the domestic market. And that's the future for us.
All right, but any impact lately with respect to the tariffs on one of your key markets, that is US, which is already seen in your business till now, I believe, and going ahead, anything that you are working forward to with respect to US market specifically?
So I think the good thing about our business is we are a B2B business, first of all, and we sell a necessity. Steel wires are a necessity for all kind of industry. So volume of steel wire or the demand of steel wire, we do not see a lot of decrease or increase, whether it is tariff or anything else. In fact, even after tariffs, our sales to the US have been stable and not decreased. In fact, we are doing our highest sales to the US even today.
Okay, Mr. Bansal, I was just going through your financials, and the net debt to EBITDA at the end of last quarter stood at about 3.8 times. If you can take us through what is the absolute debt figure right now at the end of third quarter, and what is the roadmap for deleveraging? Are you looking to reduce your debt profile?
So I do not have the exact figures for third quarter. What I can tell you is, as a company, we have grown till now from debt. Now, the change that we have done, becoming cash flow positive, and we have already generated about 150 crores of free cash in the first half of the year. So herein, this year the target is not to increase debt, and whatever capex or whatever funding we require in the company should come from internal accruals. Next year is a year where even after expanding at 100-150 crores a year, we should be able to decrease our debt. So from here on, there should not be any increase. If anything, it should decrease.
All right, we'll watch out for all those factors at play. But Pranav, so good having you on the channel today. Thank you so much for your time.
Thank you for having me.
All right, so that was the management of Bansal Wire speaking to us about the recent updates as well as the plans going ahead. Specialty as a space is something that they're focusing on cash flow generation as well as the new opportunities with respect to new capex.